Hello everyone, welcome. Today I will be presenting on IMF's economic forecast and the growth that we are predicting. Today we will discuss the International Monetary Fund's latest economic forecast, which highlights a downgrade in the global growth expectations. The IMF has revised its global growth projections for 2019 to 3.5%, which is a down from 3.7% previously. This marks the slowest growth in the 3 years and also reflects the significant changes in the global economic landscape. We will explore the key reasons behind this downgrade, its impact on different regions, and the broader implications for the major economies. The reasons for the downgrade. The IMF's decision to lower its growth forecast is stemming from the several critical factors that we can observe today. First, there is a softening demand across Europe, which is impacting the overall economic performance. This has caused a rippling effect globally. Second, financial market volatility has increased considerably, creating uncertainties that affect the investor confidence and economic stability. Lastly, the escalating trade tensions, particularly between China and US, has been disrupting the global supply chains and the trade that takes place. These issues collectively are contributing to a more cautious economic outlook globally, which has also raised concerns with the IMF today. The global growth forecast. As per the research conducted by the IMF, the global growth for 2019 is now projected at around 3.5%, which is a decrease from the earlier estimate of 3.7%. The slowdown contrasts with the 3.8% growth which was observed in 2018. The IMF is anticipating a slight rebound to 3.6% in the year 2020 onwards, which assumes the stabilization of current economic conditions. The revised outlook is underscoring the significant impact of the ongoing different global challenges on the economic performance. This is also due to the COVID effect that we are all facing today. Several risks and uncertainties could further affect the economic global growth, which we are already observing with certain changes in the global economy and the markets. These include the potential for new trades, tariffs, and ongoing trade disputes. There are multiple trade disputes that are going on between countries from different regions, increase in tariffs, bans, etc., which is disrupting the global economic stability. There is also a risk of tighter financial conditions, which could impact the liquidity and investment. Additionally, uncertainties surrounding around Brexit and the potential deeper slowdown in China is adding to the economic challenges. The risks highlight the complex environment business and the policymakers must navigate through this. The regional impact. In Europe, the economic outlook varies significantly by the country. Germany has seen its growth forecast to reduce to 1.3% because of the domestic demand becoming more weaker and a stricter emissions regulations. Italy is facing a lower growth because of the low demand and the high cost for borrowing, while France is affected by the economic disruptions from the ongoing protests. Overall, the euro area is projecting to grow around 1.6%, reflecting these challenges and broader economic issues. The slow growth in these challenges is further contributing to global economic tensions and the trade relations that would take place. Turning to major economies such as China and US, the US growth is forecasted to remain 2.5% for 2019, but is expected to grow up to 1.8% from 2020. The slowdown is because of the diminishing impact of the tax cuts and the rising Federal Reserve interest rates. In China, growth is projected to a moderate 6.2% in 2019, which is down from 6.6% in 2018 because of the trade tensions and efforts for managing economic debt and the leverage. Global trade outlook. The IMF today is expecting the global trade volume to grow by 4% in both 2019 and 2020, maintaining the growth rate from 2018, but falling short of the 5.3% growth which was observed in 2017. The slower growth in trade is reflecting the ongoing uncertainties and disruptions which is taking place in the major economies today. This deceleration in trade growth and could impact the global economic stability along with the flow of goods and services, which would further impact the supply chain. As a summary, the IMF's revised forecast is indicating weaker global growth and significant risk. The policymakers across the globe are urged for addressing economic vulnerabilities by focusing on reduction of high government debt and management of trade risk effectively. The measures are crucial for stabilizing the global economy and supporting the recovery that is required today. Thank you.